Hey, what's up, guys? Welcome back to the Flex Free Game channel. So, if you're new to the channel, thanks for stopping by. My name is Courtney Golden. I am a trading and wealth coach here in the Flex Financial Trading Group. And today, in the spirit of earnings season, I want to talk about one of the riskiest moves traders make around this time. Happens over and over and over again, and that's buying stocks, buying options right before earnings. So. I know it sounds exciting, and you're thinking, man, if this company beats expectations, I could double my money over a night. I could get rich quick. I could walk away with a quick bag. But a lot of times, it doesn't happen the way you think it's going to happen, right? It can happen, but in most cases, it's just not that simple. So, in this video, I want to break down a few major risks that come with buying stocks, buying options right before earnings, and also, I want to show you a smarter way that you can profit during earnings season, even when volatility spikes. And we're going to talk about, of course, using one of my favorite strategies, and that is cover calls. So, with that being said, let's go ahead and jump into it. The first big risk that comes with buying stocks, buying options right before earnings is the expectation trap. So it's not really all about what a company reports when it comes to earnings. What it's really about is what the market expects the company to report when they have their earnings announcement. So a company can have amazing earnings. They can report record breaking revenue. They can report strong growth for the quarter or year over year. And still, that stock could tank the next day. Why is that? Is because a lot of times the companies, their numbers and what they reported didn't beat or match what Wall Street expected them to report. An example of that is Netflix, right? Recently, Netflix had their earnings last week. They reported that their sales were up 17% year over year for the quarter. They did 11.5 billion for the quarter. All of that was in line with expectations, but the stock still dropped over 10% the next day on their earnings announcement, right? So even if you believe that a company is doing great, it sounds like they're doing great. The price and the market reaction might tell you a different story. And if you bought calls, you bought shares of Netflix right before earnings, you expected the stock to make this big old jump, then you probably lost big, right? You probably lost a lot of money last week. It's because those expectations weren't met, right? So those options are going to lose value really quick. Those shares are going to lose value very quick, especially when you get a stock like Netflix dropping 10% overnight. The second risk that comes with buying stocks and options right before earnings, a lot of new traders don't see this coming, is the implied volatility crush when it comes to options, right? So, right before earnings, implied volatility shoots up. It's like at its peak, it's through the roof, right? Because there's a lot of hype, there's a lot of excitement, and everyone wants to buy options. They want to bet on whatever move or whatever direction that they think the stock is going to go, and that causes a swelling in the volatility, and that pumps up options prices. So when you're buying options during this time, you're getting them at their highest prices. So the moment that the earnings are actually released, then that volatility starts to go back down, right? That starts to disappear from your options. So it's kind of like a big balloon that's inflating right before earnings, and then when that earnings is announced, then that balloon starts to deflate, starts to go back down, all the air starting to come out of the balloon. So even if you were right about the direction that the stock went, right? If you're buying your call or maybe you're buying puts, you might still lose the puts, or the calls might still lose value because the implied volatility collapses overnight, right? Or it collapses after the actual earnings announcement, right? So that's why a lot of traders, they wake up right after earnings and were shared, and they're like, man, I was right about the direction, and I bought puts, I bought calls, and I was right about the directions. Why did I still lose money? It's because the implied volatility, you got that implied volatility crush. It doesn't care if you're right. Once that volatility spike kind of leaves the options, right, it kind of goes back down, your option contracts may not be worth as much as what you bought them for. And that's just part of the game. That's just part of understanding how earnings work. And that's why it's very important to be very careful not to really jump in big on these calls or on these puts right before earnings. The third big risk is when it comes to buying stocks or options right before earnings is the gap risk, right? Gap on your on the price. So earnings announcements that happen after hours, right? They happen pre-market, they happen post-market, and really when you can't really control what's going on, especially when it comes to options, right? Because most of us retail traders, we can't really trade options at after hours. So if the stock gaps up 15% or gaps down 15% overnight on the earnings, you really don't have any control over that when it comes to your options. You can't really stop it, right? There's no stop loss, there's no chance to adjust, there's nothing that, right. If you're in your shares, maybe you can get out of your shares in your after hours, but when it comes to options, you're kind of just stuck. You're kind of just a sitting duck. And a worst thing is, if you're in short-term calls or maybe short-term puts and that stock goes against you, you're gonna take the full hit. You just gotta wait until the market opens the next day to be able to get out of your contract. So when it comes to buying stocks and options right before earnings, it just brings a lot of uncertainty because you just don't know what direction things are going to go. And it's not about picking and gambling on the move in a direction. It's about being successful in your trading, and it's about managing your risk. And when you just are buying and taking a chance with no real expectation of really which way things are going to go, then you're just gambling. So one of the things I like to do when it comes to earnings season and how to kind of play earnings and capitalize, especially on the volatility in the earnings around this time, is instead of kind of guessing on the direction of the stock, I want to talk about a smarter approach, and that is one of my favorite strategies is writing cover calls on shares that you already own. Right now, here's why I really like this approach when it comes to earnings and why it works so beautifully around this time, selling calls against your existing shares. First thing is you get the volatility spike right before earnings that I talked about. So those premiums that you're going to be able to collect from selling calls against your shares are going to be more expensive. So you're going to be taking in higher premiums. So that means when you sell the call option against your shares, those that you're taking in higher income than usual because of the volatility spike. And if the stock moves sideways or maybe it drops slightly, you keep the premium no matter what. That is predictable, guaranteed premium that you're going to be able to keep no matter which direction stocks your stock goes. And even if the stock pops and your shares get called away from you, you still made a bigger income because of that volatility. And if you're selling out of the money calls, you're going to be able to capitalize on that capital gains as well. So either way is going to be a win-win and a lot smarter play and a lot smarter approach than just gambling and buying and betting on the direction of the stock when you have no clue which way it's going to go or what the company is going to actually report. The other way to do it is sell calls and just profit from the volatility, profit from the hype and all the buzz around people buying options and betting on that move, and you're just playing it safe and getting that guaranteed income, right? And potential for capital gains. So remember when it comes to buying stocks and buying options right before earnings, it might feel exciting, but it's really just kind of rolling the dice. It's really just playing the market with that casino mentality. And I'm telling you, that just doesn't work for longevity in the market. I've done it. I'm speaking from experience, and I'm telling you, it's a lot better way to play the game. And cover calls is gonna be one of the better strategies to look into around this time if you already have shares. Instead, you can use volatility to your advantage with cover calls on stocks that you already own. You can get paid while everybody else is speculating, everybody else is gambling, everybody is trying to get rich overnight, and that gets you in trouble, right? That's not how you play this game. That's not how you win at this game, and that's not how you trade with strategy, right? You want to trade with strategy, not emotion. So that's it, guys. If you found this video helpful, give us a thumbs up right there. Drop a comment below. What's your favorite earning strategy? Do you agree with cover calls? Do you do something different? Or do you buy stocks and options right before earnings and gamble? Do you play it that way? Let us know. Comment below. We'd love to hear from you. And another thing, if you are looking for strategies that absolutely work, you want guaranteed passive income, you want to build wealth, you're working in a 9 to 5 job, you're working in business, you want to start growing something outside of that job, I'm telling you now is more important time than ever to take control of your finances and your financial future. And there is a wealth of knowledge right here on the internet, right here on YouTube. We are one of the channels that will help you with that. We have an awesome case study that we put together. It's free to check it out. I'll put the link down in the description box. How to generate passive income, build wealth outside of your 9 to 5 job. These are effective strategies for working professionals that we tailored just for you. So check it out right below, along with our other free resources. We also got Udemy courses that you can check out. Cover call Udemy course, long-term investing Udemy course. We're gonna put all of the resources down below in the description box so you can check those out. And also make sure you subscribe to the Flex Free Game channel for more practical trading tips, lessons. We're not about hype. We're just about profits. We're about doing strategies and trading and investing that really works. So tap in with us, subscribe, check out those resources below. Again, thank you guys for tuning in, and we'll see you guys on the next video. Have a good one. Peace.